Good morning and thanks so much for joining in. You're watching Ask PQ. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Like the name suggests, this show is aimed at getting you answers to all of your stock related questions. So if you've got them, you should send them to us on any one of our social media platforms or indeed on the WhatsApp number that should be flashing at the bottom of your screen. I know quite a few have already tuned in. Those are our regulars and you've asked your questions already. Let me introduce you to the guests that we have today that will be answering your questions. We've already got Rajesh Palviya, who's joined in, and we will soon have Rahul Shah joining in as well. Rajesh, good morning. Let's start with you. Before we kickstart the conversation about individual stocks, why don't you talk about the key levels to watch for the benchmark? We've seen a significant up move across the board. I think that's in line with what we've seen in the Asia markets and also overnight in the US markets. But is this the start of what could be a move upward for the Nifty 50?
Morning, Alex. Yes, we opened with a positive gap in line with the global cues, and looking at the setup now, the Nifty is now very well placed above to the call concentration area of 19,500, 550 zone. So short covering action is already triggered for those call writers, and now call writers are shifting their position at 19,800 strike. So that clearly shows that this up move can extend further as the put writers are taking their bets on the writing side at 19,400, 19,500 strike. So that clearly shows you the base is now shifting higher. And looking at the broader market, the breadth is already improved, mid cap, small cap, and most of the sectors are also showing good traction in terms of buying. So for Nifty, we are projecting target of 19,700 to 19,750 for trading point of view in the continuation of this uptrend. Now stop loss should be placed at 19,500. For Bank Nifty, 44,000 is the important level to watch for. If we holds those level for next couple of trading sessions, then possibly Bank Nifty may also show some upward momentum towards 44,600 to 800 because most of the large cap bank started participating and PSU banks are also contributing to this rally. So we believe that Bank Nifty should also show some more positivity. 44,000 should be your stop loss to hold long position for Bank Nifty.
We're waiting for Rahul to join in the meanwhile. Can you take us through a few stock picks that you have? And also, by the way, you were talking about Nifty Bank. I'm quite curious about the PSU banking index as well, or at least the constituents, because Rajesh, on Monday as well, you saw quite a few of these banks go up by 5% each. I saw 5 constituents of the PSU banking index that were up 5% at least.
Yeah, definitely. So Nifty PSU Bank is also looking very promising. Most of the PSU banking stocks have done well in previous session as well as the follow-up buying action is there in today's session also. Looking at the Nifty PSU Bank Index, we expect that now the next target for Nifty PSU should be towards 5,400 to 5,450 in the continuation of this up move as the Nifty PSU Bank has already given a breakout of last 5-6 week consolidation range breakout. So 5,100 should be your stop loss to hold position for Nifty PSU Bank Index. Now, if we talk about the stocks from the PSU basket, so from large cap, Canara Bank and Bank of Baroda, these two banks are looking promising. I think one should look at Canara Bank to hold their long position. The kind of breakout which we are seeing on the Canara Bank is clearly showing the next target is 435 to 440. Bank of Baroda is also looking promising. We are projecting target for Bank of Baroda towards 208 to 215. From small PSU bank, Bank of India is looking very promising. Very strong buying action in last couple of trading session. Looking at the overall structure, stock managed to give breakout of its down sloping trend line on the daily chart, and the breakout indicates that now the next target for Bank of India should be towards 125 to 130. So these three banks one can look at from the PSU basket at this moment.
Okay. Let's kickstart the conversation. Then I wanted to have a conversation about the fundamentals of Narayana Hrudayalaya. And this is, in fact, a stock that is in focus today. It's gaining on the back of its earnings. So, first, let's set the context and hopefully we'll have Rahul talk about his call on the stock. But let's talk about earnings first. Smriti has got the numbers in front of her. And I'm pretty sure that a lot of you have not gone through these details. So, Smriti, first, what are the key numbers to look at here?
Good morning, Alex. The stock, let's look at the stock first. The stock was up 5.29% in the morning, and that was an all-time high, but it's currently around 4.5%. If you look at the second quarter numbers, quite a healthy growth. Revenue was up 14.3% to 1,305 crore. EBITDA was up 26.4% to 308 crore, margin at 23.6 versus 21.34% last year. Net profit up 34% at 226 crores. Management reiterated its inflation headwinds on the gross margins in the near term. However, there's an aggressive capex plan, mainly towards its core regions, which is Bangalore, Kolkata, and Cayman. So we're yet to see how this capex is going to play out in the next couple of years. Let's start off with our guests first. Let's talk. Rajesh, do tell us, how are you viewing the stock, especially for the longer term horizon?
So, Narayan Hridayalaya has done well in last couple of trading session. After today's move, now stock managed to do breakout of its previous swing high of October. Looking at the longer term time frame, stock is very well placed above to all its long term moving averages. Monthly chart is clearly is in uptrend series of high top, higher bottom formation on the weekly chart. So that clearly shows that buy on dip should be the strategy in Narayan Hridayalaya. Or on the higher side, in the continuation of this uptrend, we expect that stock can scale up to the target of 1200 to 1250 in next couple of weeks. So one can buy and accumulate the stock even if you get any dips in the volatile market. Your stop loss should be at around 1070.
Okay. I believe we've got Rahul joined in as well. Rahul, good morning. And we set the context for you. We were talking about Narayan Hrudayalaya. I struggle with this name usually, and I'm thankful that I'm able to say it right. But what's your view on the fundamentals, and should people buy at this juncture? We've seen quite a significant up move. I think you might just be on mute. Yeah, can we try again?
Hi, good morning. Hi, good morning. So we don't track Narayan Hrudayalaya, so I won't able to comment, and I've also not looked at it to comment anything on this. But the sector looks promising, and I think if you look at it, I think this sector has done very well in last 1 year or so. So my sense is that I think in this phase, I think large cap names like I think Apollo Hospital and all should do well. And obviously we've seen 2-3 listed companies, new listed companies also. This entire segment has been in focus and has done very well. So I think sector should do well, continue to do well with the things are happening. I think in next couple of quarters, what we'll see about it. But I think Narayan would have nothing to comment at this juncture.
All right, let's start off with the questions. And the first question is from Girish Sharma, and they're talking about the counter IRFC, which is the Indian Railway Finance Corporation. They've already bought the stock at around the price of 75 in September, and they want to know the technical and fundamental view. So let's start off with you, Rahul. How are you viewing the stock for the longer term, IRFC?
So I think a longer term, I think a good business model, and after a long time, we've seen that re-rating has happened post IPO. The stock had done nothing for a couple of years, and then in last 1 year, year and a half, we've seen entire all PSUs been getting re-rated, and I think IRFC is also one of them which has got re-rated. So I think the valuations are still justified, and I think risk versus reward quite favorable. So I think with a decent gain, 15% compounder looks like from here. Don't expect any firework, which is already happened in last year, year and a half. So I think decent gains can be expected in this stock from here.
All right. Let's go to you, Rajesh. How are you viewing this stock? Now, from what I can see, IRFC has soared 120% in the last 6 months.
most of the railway stocks have done well in last couple of months. Now, since last 5-6 week, stock is consolidating in narrow price range. Overall structure is bullish. If you look at the medium term to long term perspective, yes, we do have a bullish view on the stock. Stock is in process to make a flag kind of formation. The breakout will come on the breakout above 82 level. Once the stock crosses above 82, there would be a breakout of flag formation, and then the next target for the stock on the higher side should be around 98 to 105. So those who have already bought can hold the position on the downside. Stop loss should be at around 62 rupees. Upside target we are expecting 98 to 105.
Okay, let's talk about Naukri, which is known as Info Edge. This is a question coming in on YouTube, and Navdeep basically is asking for both a fundamental as well as a technical view for the short to medium term. So I'm guessing the fundamental view is being sought for the medium term. Rahul, what's the view on this one? We've seen quite a significant up move again for this counter, up about 4% in trade today and about 15% in the month so far.
So I think I'm not so positive on this stock, and I feel that I think more or less is done. And from the risk versus reward is not favorable. The valuations are not justified at this juncture, and then I would feel that one should get into other tech stocks rather than this. So I think on that space, I think we've been quite positive on Zomato, and we've been talking about for quite some time. So here, and I think InfoEdge, I don't think so. The risk versus reward is favorable. One should exit. That is my view from the fundamental side.
Okay, fair point. I will circle back on Zomato because I'm quite curious why you're saying that, and a few other individuals have also been calling for a buy on Zomato. But first, let's take a technical check as well. Rajesh, Naukri, how does it look on the charts?
So Alex, this is the third consecutive week where stock is forming higher high-low formation. In previous session also, we have seen significant open interest built up. Long built up was there, around 7% open interest has been added in the stock. The price behavior is clearly suggesting that stock is now breaking out its a multiple supply zone at 4600. So now if stock holds above 4600, then next target for near term to short term should be around 4800 to 4860 in the continuation of this uptrend. So one should trail their stop loss at 4600, hold the position for 4800 to 4860 level. That's the short term target for the stock.
Okay, I'm curious, Rahul. Why don't you tell us about your view on Zomato as well, and what are your targets for this particular counter?
So I think if we look at it, Zomato, I think from the lows it's almost doubled, or maybe more than that from the prices. So I think if we look at the last 2-3 quarter numbers, I think the numbers have been better on quarter over quarter. And if we see that it's kind of a duopoly kind of a situation right now in that space where they are into, and if we see the management's commentary also this quarter was quite positive and forward looking. And similarly, where we see that what Street was estimating, the stock coming back, the company coming back into EBITDA level positive. So I think what we've invested is obviously in terms of the time what we've it's been trading, but now I think it would be much before that they'll deliver that order. And I think it's a unique business model. I don't think so easy to replicate, and I think any other competitors will come into the near future, which looks like. So I think from here, I think easy money will be made from here. So I think another 25-30% is warranted, and this will be keep on revising once we see the quarterly performance on quarter over quarter. So that's what the update is from the Zomatos.
All right, let's move on to the next question. This is from Amit Rastogi on YouTube live chat, and they want a long-term view on 5-star NBFC. Let's go to you, Rahul. How are you viewing the stock in case you're tracking it?
So I think five-star NBFC, I think if you look at the entire NBFC space as a whole has done well. And I think if we have to compare, I think three things positive for overall NBFCs when we have a stable interest rates environment, which augurs well for the NBFC cases. Secondly, I think the space which they are into five stars, the numbers have been quite decent and the valuations are still justified vis-a-vis the listed other players. And third, I think most importantly, they are the passion and aggression what we see in the numbers and from the management and again what we feel that I think there could be some more upside into it. So I think if you have asked me in the top bets in this NBFC space, then I think this is one of them. What we like, and I think it could be another 20% upside easy from this lens.
All right, Rajesh, do you concur the same? Do you see an upside in this stock moving forward?
So I have very limited data for the stock, but looking at the structure of this data, yes, we do believe that yes, the stock may continue its uptrend. Looking at the weekly as well as on the monthly structure, if stock continues to hold above 750, 760 zone, then possibly there would be another round of rally we can see in coming months, and possibly next target for the stock to on the higher side could be around 940 to 950. So one can hold with a stop loss of 760 for upside target of 950.
Okay. We've got a question from Rajesh Maheshwari. He's writing in from Indore, asking about Hindalco. And he's bought at levels of 457 average buying price. The stock is currently trading at 504. And at one juncture, of course, it was a top performer in the Nifty 50. It has now been overtaken by TechM, but it's still up about 3.5%. Why is it buzzing based on what you're seeing on the charts, Rajesh? Can you give us the key levels to watch? And then I'll come to you, Rahul, on the fundamentals that you need to watch out for the metal pack as a whole and Hindalco, of course. Rajesh?
Yeah, so definitely in today's session, there is a long built-up setup for Hindalco. This is the third consecutive week where stock is forming higher high-low formation. That clearly shows that there is a sustained buying action is taking place in the stock prices. Now stock managed to give breakout of its multiple supply zone at 497, 498 zone. So if at all stocks holds above 498, then possibly we can see a stock to move further higher towards 515 to 520 for trading point of view. Overall structure is looking promising in terms of short to medium term perspective. Also, stock is moving in up sloping channel on the monthly chart. That clearly shows that slowly steadily stock is inching higher on the monthly chart also. So that clearly shows trend is set for the further more upside on the short to medium term perspective also. So one can hold on the stock for trading perspective. 495 should be your stop loss. Target is for 515, 520. For positional perspective, you can hold the position even in the decline also. You can add. The good support area on the downside is at around 465. Upside target for short to medium term is 550.
Yeah. Okay, so that's the view on the technicals. But what about the fundamentals? How does it look, Hindalco? Would you suggest a fresh buy at this juncture? And if you're holding, would you stay invested?
So I think a couple of days back, Hindalco reported numbers, and I think numbers were better than what we were expecting. And I think so. What I feel is, I think in this kind of an environment, also where the global environment is I think muted, and I think the numbers were quite good. So I think going forward, also what we heard from the management side was, I think 2-3 areas. I think the good recovery and good demand coming back from the EV space, consumer space, where again, thirdly, also from the infrastructure space, the demand has been coming from. So I think these three are the drivers right now for the Hindalco, and I think we have seen that I think in the entire sector, I think it looks like that management has guided they will continue to do well in terms of what they had guided earlier as well. So in spite of this growth uncertainties which is happening across the globe, but then I think the management's guidance is quite strict. So I feel that I think there's a value at this levels that could be, I think, another 15% upside from the current levels for Hindalco. So I think in a metal space, I think very few stocks where you have with a 10 times earning and a stable earnings, and I think the growth momentum will get continued for the sectors where the demand is coming from. So I think this versus reward is favorable for the Hindalco. So I would retain buy on the stock.
All right. Next up, we have a question from Navadit on campus activewear. Now, from what I can see, the stock has plunged about 4% in the last week itself. After reporting very weak numbers, it was a fourth straight quarter of losing sales. Rahul, how are you viewing the stock from a fundamental point of view?
So I think the entire footwear space, I think obviously the campus has been, the stock has been hammered quite sharply from their highs and all. So I think obviously it's reflecting the numbers have also been pretty bad. So I don't think so in near term anything is going to happen in this campus. So but if you look at it, it's not only for this. If you look at Relaxo also is the same story. Bata also is I think sideways to negative. So nothing great in that perspective. But if somebody is looking to get into it, then I think there will be a good franchise model, something like Metro Brands or something where the retail play would come up to do it. So I think obviously its valuations were a little bit slightly expensive, but I think the growth trajectory and the entire sectors which is trading at a higher multiple is still discount to them. So I think if somebody wants to play them, then I think one should look at Metro Brands rather than getting into this campus or any other brands.
Okay. Another very long-term question, so not necessarily question on the charts, but Rahul, I'm coming back to you on Arvind Mills, right? So this is a question coming in from Mehek, and he's been holding for 18 years. The question is, should he hold it for a few more years? What's the view on the fundamentals?
So I think we don't cover Arvind from a long time, but so I think one thing is very clear. I think the entire retail play, and if we look at the numbers, I think what the trend reported, or maybe if we look at Raymond's which reported the numbers were quite good. So I think looks like I think the retail play should continue for a while, and I think Arvind, I think one should hold it. Actually, they would have here. The person would have also got a couple of other shares of Arvind, including if he's been holding long time. So I think the entire demerge story also would have got it. So I think if he has to hold it combined all together, then I think I would advise one should continue to hold Arvind.
All right. Next up, we have a question from Sadanand, and they're talking about solar industries. They already have the stock, and they bought it at 3,800 levels. The stock is currently around 6,450. They want they say it's a monopoly business, so they are looking for a long-term view on the stock. How do you view this in the renewable space, Rahul?
So I think Solara is in a sweet spot, and I think the stock has done well in last few years. And my sense is I think one should continue to hold on this stock for the current levels. Obviously, there could be not be a major upside, but I think one should continue to hold on. Maybe 12-15% is warranted from here post this quarterly numbers what they reported the day before yesterday.
I'm hoping that both of you have a view on this. Take Solutions is the name of the counter, and we've got Girish who's asking about this because he had bought it in 2018, I believe. I'm not sure what the buy price was. But first, I'll take the technical view. Rajesh, any view on this one?
So, Alex, stock is in downtrend, and we have seen significant price correction in last couple of years. And looking at the overall structure, there is no as such a buy recommendation on the stock. Still, stock is showing some recovery from the low prices, but still on the long term, short term, medium term, the trend is still on the bearish side. So in this pullback, 24-25 rupees is the major supply zone for the stock. Until the stock not managed to cross about 25, there would be again we can see a supply pressure from those level. On the downside, the critical support area on the downside is at around 19 rupees. If it breaks below 19, then again it may again go down further towards 15 rupees also. So at this moment, there is no buy recommendation for the stock. Even in the pullback, one can exit.
Do you concur on the fundamentals on Take Solutions, Rahul?
Idea on the stocks, I won't be able to comment on things.
Fair point. Okay.
Okay, let's take up the next question. This is coming from Kevin, and they're talking about Tech Mahindra. They've already bought the shares at 1,102 rupees. They want to know a long-term view on this. Now, the stock has been buzzing today. It's in an up move. Although I have not seen any fundamental change in the company. Rahul, any fundamental change that is pressuring the stock upward today?
No, I don't think so. There is anything which fundamental change in this company, which I've also come across. But I think if we look at this quarter results, and I think entire IT pack, I think we've seen post numbers. I think most of them have corrected. So I feel that I think looking at the the overall global environment, and I think looks like that could be a way the things have been. So I don't think so anything is going to happen in the tech stocks in recently. So I think if you look at there have been after a 10 years decade low in terms, there is a no growth year on year in terms of the most of the tech companies. So I feel that I think does not look like anything interesting at this juncture. So I think in the large cap space, you have a better ideas like if you want to hold into the IT space like Infi, which is a preferred bet followed by TCS, makes more sense. So I think I would advise to swap it from exiting from Tech Mahindra to Infi or TCS.
Considering the weakness that you mentioned, is there any mid-cap IT stock that you recommend?
So I think mid-cap IT stocks, I think if you look at it, I think most of them which are focused on India-based, I think they have done quite well. So be all of them. But I think the valuations and way the things have, I would prefer that I think large cap would be a better idea. But I think if you ask me, then I think KPIT would be one of the stock I think one should look at it at any declines.
Okay, and also I think to a certain extent, the IT pack is buzzing on the back of the news overnight in the US, right? The possibility that we're done with rate hikes after yesterday's CPI number. I don't know, I'm guessing here. Maybe you gentlemen can take me through that later. But we're completely out of time on this particular edition of Ask PQ. Thank you so much, Rahul, as well as Rajesh, for joining in, for answering all the questions that you did today. And viewers, we'll be back tomorrow to take even more questions. Thank you so much for joining in. And do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.